this. Boom. Right? You need to understand when to get into a trade. Because 9 times out of 10, you might not have an issue with taking the trade itself. It's about, the right time. So if y'all ready to get this information today, to really get this boot camp started, right? This is something I'm doing every single week. So starting with the essentials, if you stay tapped in with me every single week, I promise you, you will learn something and we'll get to the juicy stuff. We'll get to the real, the deep stuff, but y'all need to understand the basics first. All right. So if y'all ready to receive this information, drop a fire in the chat. Well, so I'm gonna tell you, everybody, make sure you have your notes. Okay, make sure you have your notes. All right. If you haven't already, if I see your face, if I don't see your face yet, I want to do a quick little notebook check. Okay. If you're taking notes on your phone, that's one thing. But if you are actively sitting down somewhere and have the ability to show me your notes, please turn on your camera and let me see your notes. All right. I see T. John over there. Yeli. Nika, Destiny. Al, Landra, Leah. All right, I see your notes. Are y'all ready? Okay. All right. So the first thing I'm going to go through today is the trading sessions. Okay, I'm starting from the basics for real. Right? When it comes down to the trading session, you have to understand what you can trade within the trading sessions. Right? There's a specific time for every currency pair. If you are looking to trade one currency pair and you are trading in the wrong time session, the wrong trading session, you shouldn't be surprised whether you lose money or the trade don't lose. Okay. So this is one of the things that I feel like is the most essential thing to understand at the beginning, because it'll save you from getting in a trade at the wrong time. And it'll make sure that you are playing the right plays. You're playing to your strengths, right? So the first thing you need to ask yourself is, what type of trader are you? Are you somebody who likes to be up early in the morning? Are you somebody who likes to trade right after work if you're working, right? Or late afternoon? Are you somebody who's an insomniac? You like to stay up at night? You need to understand that you are one of these 3 people, right? So I'll give you a second to think about that for yourself, right? And really think about who you are as a person. Do I like to wake up in the morning? If you're somebody who does not like to wake up in the morning, right? Don't trade the currency pairs that's for the morning time. I'm going to tell you what they are, right? If you are somebody who definitely stays up all night, might be able to catch that session, right? I'm going to go over all of this, but you need to understand who you are. You like to stay up, like to get up in the morning, or do you want to, catch the late afternoon, early evening, right? And then do what you got to do after that. Okay. So there's 3 trading sessions you need to know about. Asian session, London session, New York session. Okay. Asian session, London session, and New York session. Okay. When you got those 3 written down, drop a 1. You got those 3 written down, drop a 1. All right. The Asian session is for my late afternoon, early evening people, right? This is pretty much the start of the market, right? This is where you might see some moves, but this is really the time to catch a specific currency pairs, all right? Specific currency pairs, okay? Boom. Right? This starts at the open of the trading day, okay? If you don't know the opening of the trading day, the market always opens at 5 p.m. Eastern Standard Time, right? It just opened about 3 hours ago. It opens at 5 p.m. Eastern Standard Time, 4 p.m. Central, 2 p.m. Pacific, right? When you think about the Asian session, it starts from open, all right? So this is when you will see the market start to pump money in, okay? Whenever you see the market open, that's why you might see a jump when you're looking at currency pairs. This is the beginning of the Asian session, right? I like to use the Asian session from 5 p.m. Oops, I'm talking Eastern Standard Time. All right, 5 p.m. Eastern Standard Time to 1 a.m. Eastern Standard Time. 5 p.m. Eastern Standard Time to 1 a.m. Eastern Standard Time. Right? 5 p.m. Eastern Standard Time to 1 a.m. Eastern Standard Time. This is for my early afternoon or late afternoon, early evening people, right? What moves during this time? What moves during this trading session? Okay, this is exactly what moves. AUD, NZD, and JPY currency pairs. AUD, NZD, and JPY currency pairs. Okay. Once you got that written down, drop a 2. Okay. These are the 3 currencies that's going to be moving the most during the Asian session. Right. Another word for the Asian session is the Tokyo session. Okay. So if you hear Tokyo, this is what I'm talking about. All right. So if you are trading on your own, you're looking at currency pairs, you're looking at a trade to catch, right? Understand that if you're looking at AUD NZD versus USD CAD, AUD NZD will have more momentum than USD CAD, right? Because you are trading within that time session, the currency pairs within that time session is going to be the banks that are actually moving more money during that time, right? So that's the Asian session. London session. London session. London session for me is 2 a.m. to 8 a.m. Eastern Standard, right? 2 a.m. to 8 a.m. This is when you catch European markets, right? GBP, CHF, EUR currency pairs. GBP, CHF, EUR currency pairs. Okay. This is the London session, right? So this is for my late night people, right? My insomniacs, if you will. This is the time where you can catch a lot of money being moved in the London session, right? This is where you can catch a lot of money in the London session.
Repeat the pairs again once, please.
Huh?
Repeat the pairs for the London session again, please. Sorry.
Okay, fine. CHF, EUR, GBP. Okay. For those who don't know the time conversions as far as Eastern to Central, I'm speaking in Eastern Standard Time. Just put an hour back for Central. So say 2 a.m. is 1 a.m. So 1 a.m. to 7 a.m. Central. Okay. Pacific time, click 3 hours back. So if I say 2 a.m., 11 p.m. Right. The last trading session is the New York session. Okay. New York session. The New York session opens at 8 a.m. Eastern. And it's for the rest of the day. Right? 8 a.m. to 5 p.m. Eastern Standard Time. Right? This is the U.S. market. So it's your occasional, usual 9 to 5 market. Right? Banks come in, start getting the money together. You start seeing it slow down around 2, 3 o'clock Eastern Standard Time. Right? New York session, USD, CAD. Right? USD, CAD. Okay. New York session is where most of the money will be rent. Most of the money will be moved. This is because of how prevalent the US dollar is, right? Because New York session starts while the London session is still going, there's this time window, which we call an overlap, where you will see a lot of the money moved at one time. Okay. So if you are ever awake early enough to catch the London, New York overlap, this is when you'll catch a lot of money plays. Okay, so please be aware of that. All right, now I'm gonna give you some times where it's actually the best time to trade within each session. Because yes, this is the full window of the trading session, but that does not mean that the money's going to be moving for that entire session, right? So when you have a trading session, right, when the banks start to come into the market, you have to understand that it's going to take about an hour for them to warm up, minimum, right? So I was taught that you should not trade the first hour of the trading session, right? Give the market, give the banks time to get their playlist, if you will, together, right? How they're going to play the market today, and let them see what they're going to do. So if you're looking at the Asian session, wait an hour, at least minimum, to start trading. The best time to trade Asian session is from 9 p.m. to the end of the trading session, right? 9 p.m. Eastern, okay? This is where you'll catch a lot of the Asian session money start moving in preparation to switch over to the London session, right? Same thing with the Asian and London session. You have a period of overlap where there's a lot more money being moved than the entire session itself. So from 9 p.m. from 9 p.m. to the end of the trading session, right? I'm gonna give you the overlap. 9 p.m. to 2 a.m. Eastern Standard Time. Asian session to the London session overlap. Okay, this is the time, this is the best time to trade if you're looking into late afternoon, early evening to really catch some plays before you go to sleep, whatever the case may be. Okay. London session. You want to give London session an hour to wake up, right? And you'll see that the market will truly start moving, right? 2 a.m. to 6 a.m. is the best time for London session. 2 a.m. to 6 a.m. Eastern Standard Time is the best time for London session, right? With this being said, this is where you'll catch a lot of money in and of itself. If you're going to go a step further, I'll say London session plus the overlap, 2 a.m. to really 2 a.m. to 10 a.m. 2 a.m. to 10 a.m. Eastern Standard Time. This includes the London session, where the money starts moving, and the overlap into the New York session, right? Understand that the overlap will 9 times out of 10 be pumping the most money because you have more banks involved in the market, right? A lot of the banks are waiting for the US dollar to come into play. So the London overlap 9 times out of 10 will be the time that you'll see a market actually make its move, and the New York session will be the time that it actually continues to move, or sometimes it'll start to move in New York session right after. All right. And on New York session, right? Like I said, I include the overlap. I say 9 p.m. to 2 a.m. 9 p.m. Eastern to 2 a.m. Eastern for the Asian Tokyo session. Okay. For the New York session, 6 a.m. really to like lunchtime is the ideal. So 6 a.m. Eastern to 12 p.m. Eastern Standard Time is the ideal window. Sometimes you can extend it to 2 p.m. Eastern, okay? After 2 p.m., you see that a lot of the banks have already solidified their move, and you'll see the money start dying down, right? This is what we call consolidation. There's no coincidence why, if you're looking at a chart and you see that after 2 p.m. Eastern Standard Time hit, the market starts consolidating and slowing down until the end of the trading day. Okay, if you don't know, at every time at 5 p.m. Eastern Standard Time, the market resets. So if you are ever in a trade, say for example, you was in a trade for MetaTrader 4, and you was wondering why you can't change or modify a trade 1 p.m. Eastern Standard Time hit, that's because the market is resetting. You gotta wait 30 minutes to an hour before you can do any modifications to the trades that you are in, or even get in a trade for that matter, right? So whenever you see the opening at 5 p.m. Eastern Standard Time, this is why the spreads are high, because the banks got to leave room for whatever the market does while they're not open. This is why we say never trade at the beginning and never trade at the end. Or if you make your money and you want to get out of a trade before the end of the trading day, you have to close your trade before 5 p.m. Eastern Standard Time. You're going to get hit with the spread on you. There's been situations where the spread itself will hit your stop loss. It will be nowhere near your stop loss as far as the market itself, but because the brokers and the banks open the spread, it's your stop loss, right? There will be times, right? Well, as soon as 5 p.m. Eastern Standard Time hit, there's this thing called swap fees. It could be good, it could be bad, depending on how large your lot size is, right? That's why 9 times out of 10, you'll see a lot of people only trade during the day, unless you're a swing trader. You're gonna just hold a trade for, a week, 2 weeks, okay? This makes sense as far as the trading sessions. Drop a 3 in the chat. But the next thing I want to go over is pips, right? The next thing I want to go over is pips. No matter what package you have, HFX, FRX, DCX, whatever the case may be, you need to understand pips. You need to understand how to break down pips, right? So this is what we're going to do. I am going to do this. I am going to make my other one co-host. and share my screen. You can see my screen, drop a 7 in the chat. You see my screen, drop a 7. I'm going to choose a blank pair that I don't look at often. I actually need to go through this again. Boom. All right. If you don't know, if you don't know what a pip is, a pip is a point and percentage, right? Pip is a point and percentage. So what does this mean in simplest terms? The world economy had to find something that they can use universally for the foreign exchange market. A pip is the universal currency to make sure everything can be tracked precisely. So you can't trade, that's why you can't trade in euros, right? The price isn't in euros, the price isn't in US dollars. That's why there's currency pairs. Each currency pair has a set exchange rate, and that exchange rate is counted in pips. Okay, so for example, CHF JPY is counted in pips. So 119.503, right? You need to understand how to break down this number. I'm not going to go over that with you. Okay, so a pip is a point in percentage. Okay, so let's say we have this number, right? This is just for JPY pairs. JPY pairs all have this 100 kind of like number. Okay. Kind of break this down. So the last digit is what we call a pipette. Okay. So this is for regular currency pairs. I'm not even going to get into exotics, cryptos, or commodities today. I just want to give y'all the basics so you understand it right now. Next time I'll go over the exotics, commodities, because those pips are different. Okay. And it's really based on your broker too. So that's a little bit more complex. I want to make sure you understand the basic stuff first. Right. So say you have this number. Right. This is for all base currency pairs. The last digit is a pipette. A pipette is like a pipette is 1/10 or 0.01 of a pip. Right? It's just like a decimal number. Okay. Not 0.01, 0.1, sorry. 0.1. 0.1 of a pip. Okay. So 50.3, 50.4, 50.5. That's what a pipette is. A pipette is also known as a point for HFX. Okay. So you'll probably hear the term for pipette for FRX. Equals a point for HFX. Right. You'll hear them say point instead of pipette. Okay, moves 1 point, 10 points, 100 points, whatever the case may be. So you understanding this will help you figure out this number, especially on the FRX side and the HFX side, okay? After that, it's just your regular units place. Ones, tens, hundreds, thousands, 10,000, right? Ones pip, 1 pip, 10 pip, 100 pips, 1,000 pips, so on and so forth, okay? So say that we have this number, right? Say that we get into a sell, right? Sell is the more complicated one to understand. right? Say we get into a sale at this price. And the market has moved down to 119.235. Okay. I'm gonna ask this to see if anybody knows the answer, but how many pips has moved from this number to this number? How many pips is that? For 119.503 to 119.235, how many pips is that? So 27, 26 and some change, really. But yeah, 27, right? That's how you figure it out. For a sale, you're literally just taking the highest number, subtracting from the lowest number, right? So 119.503 minus 119.235, right? Just a little simple math. You get 50.3 pips minus 23.5 pips, if you want to make it simple. So that's 26.8. Yeah, 26.8. So this is 26.8 pips, okay, between those two prices. If this makes sense, if this doesn't make sense, drop a 2. If this does not make sense and you want to see another example of how to count pips, drop a 2. Okay, so, right, choose another one. We're going to go to Euro USD, right? Ooh. Okay. Boom. All right. Same concept, remember? Remember what I said. The last digit is a pipette, right? So for Euro USD, we got, I'm gonna use this current price, 1.18735. My phone charging, please. 18735. Okay. Now, let's say that we get into a buy. Okay. Let's say we get into a buy at 1.18735. And the market moves up to 1.18, no, 1.19325. Okay. It moves up to 1.19325, right? How many pips is this? All right, going from current price, which is 1.18735, and the market moved up to 1.19325. Right? Remember the placements. The last digit is the pipette, no matter what. Ones, tens, hundreds, thousands, so on and so forth. Okay. So I'll give y'all a second to think about it. How many pips is this? From this price to this price. Anybody else? Only got 2 answers. Only got 2 answers. 59. One more person. 0.59. So how did you get 0.59? You can come off mute. So for those who answered 0.59, John or Leah, come off mute and let me know how you got 0.59.
Can you hear me?
Yep.
I subtracted the 1.9325 from the 1.8735. And then that's how I ended up with the 0.59.
All right. So remember the conversions, right? This last digit place is a pipette. It's almost like a decimal number, right? So if you subtract these two numbers, you are left with, and please don't forget this 1 is here, okay? Please do not forget that this 1 is here. That makes a difference, right? You forgetting the 1, 0.59 is different from 0.0059, right? This is what you get. I'm gonna add a 0 at the end too. This is what you get when you subtract these two numbers. All right, you understanding pips now, right? Start from the right, move to the left. Always start from the right, move to the left. Pipette, ones, tens, hundreds, so on and so forth. So pipette, ones, tens, hundreds. So as you look at this number, you have 0 pipettes, not worried about it. Ones place, you have a 9, 10 place, you have a 5. So this is 59 pips, right? 59 pips. And Jaden, to answer your question, yes. If you get 590, just take the 0 off, right? 59 pips. If you already know, I'm gonna give y'all little tricks, right? Say that this number was 1.18935, right? If you see that these first 3 numbers are the same, you're just dealing with the ones in the tens place. So why worry about everything else? If you see that these numbers are the same, worry about the pipette, the ones in the tens place. So this is 20 pips. Make your life easier when you're doing these calculations so you're not stuck in one place at one time. Okay? If this makes sense about pips, drop a 4 in the chat. Right? Same thing with HFX. Instead of calling it pipettes, call it points. For you, you still need to know how many pips are in between a resistance level and current price. So you could look at your broker and say, okay, price is at 1.18735. They said, wait for 5 to 10 points before I get in an entry for a sale. You need to know how to add that to current price to find your price level, right? You do 5 to 10 points, you're looking at 5 to 10 pipettes, right? That means you're looking at 1.1874 or 1.18745. That makes a big difference in understanding what you're looking for. We're waiting for the next 3 to 5 pips. You need to be able to look at your own chart, whether you're on TradingView or you're on a product itself. You need to be able to understand, all right, let me add 3 to 5 pips to current price. Let me put my own resistance level. All right, let me put my own resistance level. All right, boom, I'm ready. You understanding this will help you make sure you get in at the exact same time that they call out their idea. Right? You don't want to be late, especially on the HFX side. You do not want to be late getting into a idea because you don't know where it is at the price level that they called out. If you see prices at 729, they call out 850, do the math, find the pips, put your level, put your resistance, put your support. Right? Say you get an HFX switch and they say Euro USD put at 850. You need to know how far away that is because that determines how fast you need to be ready to get into the trade. If you do the difference, if you do the math and it's like 30 pips away, you got some time. Set an alert, move on. But if you do the math, it's already about to be 3 pips away. Okay, let me make sure I'm ready. Yes, getting the number is one thing, but understanding it is a whole lot easier because we're gonna start going like this and it's gonna make sense. Why they call this number? Go back, look. Oh, okay. Makes sense. Right? For my FRX people, you need to understand pips because the next thing I'm gonna talk about is lot sizes. Okay. Next thing I'm gonna talk about is lot sizes. All right. So this is tailored for the FRX people at the moment, right? Because they need to understand how to calculate their risk. Okay. HFX is very simple. Just do your percentage, boom, you have your dollar amount. But for my FRX people or for cryptocurrency, if you're trading crypto on your broker, you need to understand pips. You need to understand pips, right? Whenever you get a trade on Swipecoin and they give you stop loss and an entry price, you need to be able to find out how many pips that is so you can find your risk amount, right? Say they called out a Bitcoin trade at 35,000, right? Entry price 35,000, stop loss at 34,500. You need to know how many pips that is. I'm gonna go over that tomorrow, or I'm gonna go over that next week, because you need to understand the differences between when you start getting into exotics, when you start getting into the commodities, the metals, gold, silver, NAS, US 30. Those move entirely differently than the regular currency pairs, right? So this week, like I said, we're doing the basics. Next week, I'll throw in those so you understand. Then you understand why your mentor is telling you you cannot trade US 30 on a $100 account. The pips are different. It moves faster, right? So next thing we're talking about is lot sizes. So with lot sizes, you need to understand there's 3 different tiers, right? With lot sizes, you need to understand that there's 3 different tiers. All right, you have the micro, you have the mini, you have the standard. Okay, the micro, mini, and the standard. The micro is 10 cents per pip. The mini is $1 per pip. And the standard is $10 per pip. All right. The reason why I'm going over this information to apply it to all sides of the business. If you're on the HFX side and you still are copying and pasting, you need to know this. There's no reason why I see you dropping a standard on a currency trade and you only have $200 in your account. Ain't it? Right? Like I said, there's no reason that you drop a standard on US 30 and you only have $500 in your account. No. You need to know the different lot sizes. Okay. Micro, mini, and standard. 10 cents per pip, $1 per pip, $10 per pip. Right. Next thing you need to know is how they are translated to lot sizes, right? 10 cents per pip is a 0.01 lot size. $1 per pip is a 0.10 lot size. And a standard is a 1.00 lot size. Okay. This is how this correlates to lot sizes. So, right, micro, mini, standard. It's going to be ideal for when you start talking about risk management and knowing how to calculate your lot size, right? This is why I taught you about pips. This is why I taught you about pips. Let's say we have a 0.01 lot size, or let's say we have a trade, right? Now, I'm not doing risk management right now, but let's say we do a trade and the trade has a take profit of 50 pips and TP is smacked, right? Let's say we have a take profit of 50 pips and we gain 50 pips in profit. If you have a micro, we're just gonna say we do a 0.01 lot size, right? We're just gonna do the basics right now. Say we have a 0.01 lot size in our trade and we have 50 pip take profit that gets smacked. How much money did you make? Right? Remember, 10 cents per pip, which is a 0.01 lot size, and we caught 50 pips. How much money did you make on a micro lot size? Just one. Drop it in the chat if you know. $5. $5. Now, let's say we use the mini lot size, right? For the same 50 pips, how much money did we make? 50, right? And now let's say if we used a standard lot size, a 1.0, 50 pips, how much money did we make? 500, right? Boom. So you see, the more capital you have, the more money you can potentially make. But I am somebody who likes the numbers, the percentages over how much you make off of a trade. So don't get caught up in the number difference between the lot sizes because you attempting to be a big dog when you're not ready to be a big dog account-wise is going to make you blow your account. And that's all I'm going to go over risk management next week. Okay? It's all about the essentials first. Before I can even give you the rest of the numbers, you got to understand the basic numbers. All right? Boom. Let's say that we want to have a 0.05 lot size. How much per pip is that? A 0.05 lot size, how much per pip is that? 50 cents. Right? Say that we wanted a 1.25 lot size. How much is that? 1.25 lot size, how much per pip is that? $1.25 lot size. I threw y'all a curveball, I see. Ooh, I got y'all. Okay. 1.25 lot size, right? Let's break it up into the places, the places, right? We have the 5, right? A 0.01 is 10 cents per pip, and we got a 5. So 0.05, right? We can break it here. I'm gonna show you exactly how to break this down, right? 1.25 lot, all it is 0.05 plus 0.20 plus 1.00. Okay. Now that I broke it down, I'm gonna give y'all a second chance. A 1.25 lot is just a 0.05 plus a 0.2 plus a 1.0 plus a standard. Convert that to how much? How much is that per pip? This is the exact reason why I'm doing this, because y'all need to know this, especially when y'all doing risk management. All the lot sizes ain't gonna be cute all the time. 1250. 1250. How you still get 1025? Right? Let's go through it. A 0.05 is just 5.01 lot sizes. So 10 cents multiplied by 5 is 50 cents per pip. Right? I don't know what just happened. A 0.2 lot size is just a 0.1 lot size times 2. So $1 per pip times 2 is $2 per pip. So we have 50 cents plus $2. And then a standard is just $10 per pip. So 10, right? Equals 50 cents plus $2 plus $10. Right? You get $12.50, right, per pip. Boom. So don't get confused, because when I go over risk management, I'm gonna be making some examples for y'all again, right? Because you need to understand exactly how to do this. 0.05 plus 0.2 plus 1, right? 50 cents was $2 for $10, right? Give y'all another example. What number I want to do? 5.73 lot size equals what? 5.73 lot size equals what? 5730. All right. 5730. Break it down just to make sure everybody got it. 0.03 plus 0.70 plus 5.0. Right. All that is 3 10-cent lot sizes, which is 30 cents, plus 7 $1 lot sizes, which is $7, plus 5 $10 lot sizes, which is 50. Go ahead and add that up, 5730. $57.30 per pip.
So really, you can just move in the zero, that small over and add the zero.
Mm-hmm. That's all this is, right? Move it 1, 2. 0.01 lot size is 10 cents. Move it over 1. 10-cent lot size. Move it over 1. Standard. Move it over 1. Somebody caught on to the trick. See if somebody's gonna get it. Right? That's a little trick for you. You see your lot sizes, move it over 1. Everything is based upon a 10th per se, right? Or 10. 0.01 is multiplied by 10. 0.10 multiplied by 10. Boom. So whenever you have a lot size, move it over 1 decimal to the right. If you have this number, if you know how much you could risk per pip, when I get into risk management, move it over to the left, 1 decimal. So if you know you could risk $23, right? if you know you can risk $23 per pip, 1/2.3 lot size. If you know you can risk $1 per pip, 0.1. If you can risk 53 cents per pip, this is a good one actually. All right. Now it's time to really get to some of the rules that's not really talked about, but this is very important. Say that you figure out your risk management and you can risk 0.57 per pip. Oops. Per pip, right? What lot size is that? If you can risk 0.57 cents per pip, what lot size is that? Anybody else? 0.057. I got 0.05. I got 5.7. Anybody else? All right. So remember what I just said. If you are converting the amount per pip to a lot size, move the decimal to the left. If you are converting the value per pip into a lot size, move the decimal once to the left. All right. Now, Ellie, you are on the right track, but you cannot go any lower than a 0.01 lot size. Right. So you have 0.057, and you know the lowest you can go is the 10 spot, and it's the 10 spot. Right. Do you round up or do you round down? Do you round up? Do you round down? You do not round up. You do not round up. Because now that means you are risking more than what you were allotted for in the first place. So if you're doing these calculations, right, say that you know you can risk, like I said, 57 per pip, 57 cents per pip, and you get 0.057 after moving the decimal, you are rounding down to the nearest lot size, which is 0.05. Right? So your lot size for a risk amount of 0.57 is 0.05 lot. All right, boom. I'm gonna give y'all another number, okay? You did your risk management calculation, crunched up the numbers, and your number came out to, I'm gonna say you have a big boy account, right? I'm gonna say you have a real big boy account. 237.93 per pip. What does that equal for lot size? 237.93 per pip equals what lot size? I'll give y'all a second. Give y'all a second. Mm-hmm. 23.793, 23.79. Anybody else? I want to get all opinions so I know how y'all thinking. 23.79. Okay. So the answer is 23.79. Remember, John, if you have that last 3 that makes this longer, drop it off to the lowest next lot size.
So I got to remove the last digit at the end, pretty much.
Yeah.
All right, cool. I got you. My bad.
Boom. Your lot size, I don't know why I got a dollar sign there. It's 23.79 lot. This is a big boy account for sure. Right? That means if your trade moves 10 pips, they're already up $2,400. That's a big boy account for sure. All right. So you know how to find the lot sizes, you know how to do the conversions, you learned about the trade sessions, you know what a pip is, you know what a pipette is, and how it relates to a point. And you know about the different currency pairs for the trading session. Okay. There's one more thing I really want to show y'all. Let me see if I can find it. I just thought about it. All right. Just a little extra sauce that I might have for you guys. If I can find what I'm looking for. I think I did. There's no telling me. Let's see. Boom, 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 boom. I just saw it too. Give me a second. All right, I want to go over some of the currency pairs just a little bit more. Something that I saw myself. I think this is it. It is. Here we go. All right. Last little sauce for the session. And then we good. Okay. Put this up. Downloads. Wow. So with the currency pairs, right? I actually want to go over the currency pairs. Okay. I actually want to go back into the currency pairs. All right. The next thing you need to understand is what moves slowly and what moves fast. Okay. And this is going to be the last thing I'm going to give y'all. Okay. I'm glad I remembered this. Because my advice as a trader is to find the 1 or 2 currency pairs that are in alignment with your trading schedule and to truly start, practicing with that, right? Only those 1 or 2 currency pairs, right? There's 3 different types of currency pairs. You have the slow, which means it moves a certain amount of pips a day. Medium, which means, pretty average movement. Then you have the fast, right? This applies to both FRX and HFX because if you catch a HFX trade on the wrong currency pair, right? This might explain GBP AUD for y'all or why y'all see so many spikes in a trading session, right? So slow, medium, fast. This is how fast currency pair can move in a day, right? Slow is like less than 70 pips a day. Less than 70 pips a day. Boom. medium, which is cross out 70 to 130, 70 to 130 pips a day. $70 to $130 pips a day. And then fast, which is 130 to 300 a day. Right, boom. Now, these are the three different categories. You understanding this, like I said, will help you make sure your entries on both FRX and HFX are top tier. Slow, right? The slow ones. I'm just list them out. You can just write them as I go along. AUD CAD, AUD CHF, AUD NZD, AUD USD, CAD CHF, Euro CHF, Euro GBP, NZD USD, USD CHF, NZD CHF. These are the slow pairs, right? Move less than 70 pips a day on average, right? After I write this out, I will give you examples of exactly what I mean, okay? Medium. Medium. You have CAD JPY, CAD JPY, AUD JPY, CHF JPY, Euro USD, NZD JPY, USD CAD, USD JPY, Euro JPY, GBP CHF, AUD JPY. Those are the medium ones. Okay. Those are the medium ones. The ones that move fast. Euro AUD, Euro NZD, GBP CAD, GBP AUD, GBP JPY, GBP NZD, GBP USD, and Euro. I don't know why that's on this one. All right, that's it. These are the pairs that move fast, medium, slow. I'm not getting into exotics because that's a whole different beast. But base currency pairs, this is what moves, right? This is slow, this is medium, this is fast. This is slow, this is medium, this is fast, okay? Now, make sure you screenshot this, or were you ready to move on before I start giving you examples? Drop a 5. All right, want to make sure y'all good. Drop a 5 when you're ready for me to show y'all exactly what this means. Right. Okay. Let's pick one. Somebody pick one from the slow category. All right, just pick a currency pair. Let me know. Let me do this. I'll make sure I am aware. 80 CAD. Okay. Give it a little flavor. 80 CAD. Boom. when we talk about slow, right? Look at these days. If I were to measure this out, right, from high to low, that's only 36 pips, right? Even though the candles look exaggerated, this is nothing. 36 pips from the lowest to the highest point over the span of a day. If you were to catch this buy move, right, you caught about 35 pips. That's it. Even if you caught this drop, this is probably about 60, 70 pips, right? Below the 70 pip a day average, right? You caught it on this day from up here, or what I got in this, right? You catch it from up here, 60 pips. You see, it's not going above 7, right? This is the definition of a slow pair. Pip wise, it will not move a crazy amount of pips. Does not mean you can't make money though. You just need to know what currency pair that you are trading. So if you see that you are in a currency pair like AUD CAD and you wonder why it's only moved 5 pips in the last 30 minutes or to an hour, you got to understand it's going to take a lot longer. You got to understand it's going to take a lot longer to hit your price, the price level that you want. So you got to be patient. So my slow currency pairs are for all my patient people. Don't mind waiting it out. Have the time of day to really get in those currencies, especially if you're taking FRX trades. Okay, if you're not, if you're not copying and pasting and you're looking for your own trades and you call this out for yourself, understand you need to just be patient with it. Okay. Let's go back to Euro USD. Somebody give me a medium pair. Somebody give me a medium pair. CAD Jippy. CAD Jippy. Boom. Mine is, it really open like that? I feel bad for everybody. This is exactly what I mean, right? This was after, you know what? I ain't gonna check that right now. This is ugly though. Perfect example. Let's see how many pips this is. From the high to the low. 120, right? Remember, the medium is between 70 and 130. This currency pair moved 120 last Thursday. From the high to the low, moved 102, right? This is better, for my intraday people. I ain't even just gonna say intraday. For my people who are patient but not as patient, right? You know what you need to do. You know how to just wait on a trade, but you still don't want to be in a trade all day, or you don't want to be looking at a currency pair all day. So, you're up 30 pips, you chilling, versus you waiting all day to catch 30 pips, right? So literally right here, this was 100 and some change. You catch your 30 pips in about an hour or 2 hours, you're done. Right? This was 15 minutes. It's about 3-4 hours. You catch your 30 pips. You don't even care about the rest. You're going on about your day. Right? Same thing over here. You catch this entry, that's 38 pips. Overall, this was probably from the top to the bottom, about 50. Okay. So understand that you have a lot more when it comes to catching the pips. It can happen a lot faster than slow pairs. But you got to understand that these are moving. Right? These are moving. From the high to the low, about 50 pips. But it went up 50 just to go down another 50. That's consolidation. That's 100 pips a day. Right? It went up just to come back down. So this example, bottom to the top, it went up 37 just to come back down about 25. So about 60. It's around that 70 to 30 range, right? All this is consolidation. Hence why the big move finally happened, right? Finally. If you know highs and lows, I'm gonna be teaching this as well. Lower low, lower high. People made money off CAD JPY last week, for sure, right? Same thing that happens here. This was a very large expansion move. Wow, 112 pips. In the span of probably a third of the day. This is 10 hours. Just over a third of the day, 10 hours, right? So that's the medium pairs. The last thing, the last one is the fast currency pairs. Pick one, pick one, pick one. DJ. Huh, that was on the same track. DJ. Wow. Today alone, it has already moved 40 pips. We're not even done with Asian session yet. In the span of it opening already, it's already moved 40 pips. From the high to the low, 186 pips, 180. From the high to the low, 180 again. This was consolidation, right? From the low to the top, you got 40, about 45. From the top down to here is another 70. GJ is probably one of the most aggressive pairs when it comes to pips, so you need to be aware of that. This is fast. You see here, you could already made your 40 pips at the beginning of Sunday and been done. And this is just over a couple hours. You catch 20, 30 pips. You can catch 20, 30 pips in as little as, in really like 30 minutes, up to an hour. That's how fast DJ moves. But when it moved, it's going, right? You see it. You can catch the move before the move and be done for the day. You catch this here, you caught 40 pips, and you could come around and catch 100. Knowing the currency pair that you're trading will help you determine how aggressive you can or cannot be for that trade. You can catch the buy movement too. It depends on your strategy. I'm just showing you can catch 20, 30 pips in 20, 30 minutes. Versus AED CAD to catch 30 pips, you're in a trade for 10 hours. You need to know who you are as a person so you know what currency pair to trade. Like I said, you are a patient individual. You don't mind waiting. You want to be the safest possible. Catch the slow pairs. If you are somebody who still patient, but definitely wants to get that money and get out still, look at the medium. If you just money, let me get my stuff, let me get out. The fast pairs are going to be the ones that will pay out faster. But you got to understand, the faster it is, right, the more risk involved. That means you got to give leeway depending on your strategy. You might have to give leeway about 10, 15 more pips than you would have to on 80 CAD. So your risk amount or your lot size for GJ might be less than your risk amount for 80 CAD. Make sense? Start with determining who you are, right? If you know you want to deal, start with the slow. Get comfortable with lot sizes as well as understanding how the market moves, right? Even for HFX, you understanding what's slow, medium, and fast will tell you how hard the market will react off of a specific strategy. If you get into a 1 minute trade on AUD CAD, it may or may not move in 1 minute. But if you decide to get in a 5 minute trade on AUD CAD, give yourself some time to actually move, might make a bigger difference than you just being in it for 1 minute. If you ever be on my sessions, this is what I think about. All right. But outside of that, that is all I have for this session, right? I will drop the recording because I know some people left early. They definitely missed out on this last little bit of information, but it is very vital for everybody to receive and have access to it. All right. I will be posting this on my YouTube, right? This is part of my outreach, as well as showing people that I'm really about teaching this information to begin with. All right. So outside of that, I appreciate everybody who's taking the time to hop on this session, has learned something, maybe even open your eyes to something that you overlooked, right? Because 9 times out of 10, once you really start learning something, you might end up forgetting it because you're worried about something else, right? So I just wanted to be this kind of like mind jogging thing for a lot of the people who may have learned this information already, but is needed, that jolt to like, okay, let me make sure I'm applying this still. And as you can see, there was a lot of people on here that didn't know this. This is why I'm doing this, right? So I'm glad everybody got some valuable information. I will be back next week at the same time going over the next step. Okay. So I will see y'all next week. Have a beautiful rest of y'all day. I'll talk to y'all later.